Let's drill down on today's inflation figure and bring in Shane Oliver, the Chief Economist with AMP. Shane, thanks for your time. I guess I'll start with
Thank you, Tom.
glass half full. It's a figure that beat expectations in terms of being lower than expected, and it doesn't really take into effect that last rate hike. So does it feel like we're almost back on track with that Treasury forecast of moderating?
Look, I think we are back on track. The numbers in the previous couple of months had gone up again. Now we've resumed a downswing. We know the monthly numbers, monthly CPI can be quite volatile, and it does exclude some items that are not surveyed every month. So we've got to be a little bit cautious about it. But the way I look at it, I think we are back on track. I'm also conscious that inflation in Australia peaked about 6 months after the US. The US got to 9% in June last year. We only peaked in December at 8.4%. And that followed inflation numbers in November and December on a monthly basis of 0.9% and then 1.5%. In the next couple of months, those two monthly increases will drop out. So if we just average what we've been seeing over the last 6 months or 3 months, our headline inflation number on an annual basis will drop down into the threes over the course of the next 2 months by the end of the year. So it looks to me like we are back on track. I don't want to get too excited about it just yet because these numbers do bounce around a bit. But the evidence to me suggests we are heading in the right direction again.
Yeah, you make a good point around what's there, what we're coming off, because that matters in terms of this annualised figure. But service is largely missing. So how much of a difference could that make? Because I guess the RBA is weighing up this decision. They'll have a quarterly figure in late January. Does that say to you, I know she's been pretty forward-leaning, Michelle Bullock. I'm not going to second-guess her and be too confident, but wait for that January figure. Don't ruin Christmas.
That's probably right. Look, I think the RBA has often justified moves after data supported it. You could argue we saw that in October. We saw the, rather than November meeting, we saw some stronger inflation numbers, and of course, they felt the need to move again. This time around, we haven't seen that. In fact, since the last meeting, we've seen softer figures for retail sales. We've seen softer figures for inflation now. And of course, even house prices look like they're losing momentum in Sydney and Melbourne and possibly starting to fall again. So to me, there's no smoking gun to justify a move in December next week. I think they will leave rates on hold, but they will retain a tightening bias and signal that they may still have to raise rates again. Then, of course, you're right. Yeah, we wait for the December quarter CPI numbers at the end of January. If they come out on the high side or higher than their expectations, then we'll see another hike. I think the more likely scenario, though, is that they actually come in a little bit less than their 4.5% number for the annual number for inflation, and that I think will enable them to leave rates on hold. But I guess the Reserve Bank here is trying to do two things. Yes, they have actually raised rates, but they're also trying to talk down expectations. I guess convince people to be cautious in terms of their spending. So they want us to actually, in the words of the New Zealand Central Bank Governor, cool our jets, slow down spending into Christmas. That's what they want to see. And so part of what they're doing here, continuous comments, are aimed at jawboning people to be more cautious in this.
Yeah, it's interesting. I mean, New Zealand inflation higher, looking at more hikes, and you wouldn't want to be the UK either. So we're not going too badly, but maybe I'm putting too much store in this monthly figure. We'll see it bounce around. What are your thoughts on what the government could or should be doing in MyEFO? Because all the indications from asking Labor ministers this week is they just talk about what's happened, and there's no even subtle hint around cost of living relief. Is there something else on the shelf? We obviously had the fuel excise, which was basically described as neutral on inflation, which has got to be the first pass mark for anything, and then obviously helps out with cost of living. Is there some other lever they could pull to help out the cohort that needs it? Not the retirees, not the people going on cruises, but those, with the bigger home loans who took them out recently and are really struggling compared to the rest of the nation.
Look, it's a really tough one. In fact, former Governor Lowe only yesterday said something like governments often come in and say, we'll offer you a bit of assistance, which ultimately then adds to inflation. That's a bit different to what he was saying when he was governor, but there is that risk there that if you do anything on fuel excise or any forms of household relief, then on the one hand, you pull the headline rate of inflation down, but you also give a bit of relief to people, which may mean stronger spending. So it's a difficult balancing act for the government. My sense as an economist is the better response is to just wait. I think the inflation numbers are coming down in the right direction. Rather than risk putting more money out there and a fiscal easing, it's probably better to wait and hope that those inflation numbers continue to come down, because that's probably ultimately the best way to help low-income earners get lower inflation, which is something the Reserve Bank has also pointed out in the past. I mean, I know there is an argument to do those sort of things. It does help lower inflation expectations, so it's not as negative as some economists portray it as. But I think it does come with some risks that ultimately it just slows the decline, slows the pace at which ultimately inflation would have come down.
Yeah. Yeah, the two things that matter are the sort of how high it is, but also how long it stays above 3%.
Yeah,
that comes ingrained. That's what we want to avoid, isn't it? Yeah.
That's right. The danger takes longer back into target.
Shane Oliver, great to get your thoughts. Thank you.
Thank you, Tom. Take care.